When you do these renewable resource-based low carbon fuels, our raw material is actually carbon dioxide in the atmosphere. That is the source of renewable carbon. We have to pack that carbon back into a hydrocarbon fuel like jet fuel or gasoline. So how can you do that efficiently?
So we take corn and we then fractionate it so that we separate out some of the different components, part of those things being food. So we do produce a lot of protein. That protein stays in the food sector. And then the starch, the residual starch in that corn, we are then converting into a biofuel in the form of isobutanol.
We do it using a technology that we developed where we took a yeast that normally makes ethanol and we genetically engineered it so it just makes isobutanol. And then we use conventional engineering techniques to clean up that isobutanol and get it ready for its next step, either using it in the market as is or converting it to things like jet fuel and gasoline.
Hello, I'm Michael Kopinski, the Director of Research at Noble Capital Markets. One of the hottest topics today is climate change. And one of the companies in the crosshairs of this issue is Gevo. Gevo is a developer of high-value, low-pollutant, low-carbon substitutes for gasoline and jet fuel. It has a market cap of roughly 18 million, and its stock symbol is GEVO, just like the company's name. In this program, we would like to uncover questions like, with gas prices relatively cheap, why should investors be interested in alternative fuels? Have regulations relaxed so much so that the auto and airline industries are complacent about emission standards? What are the leading fuel substitutes, and can they be price competitive? We're fortunate at Noble to have an expert, transportational logistics analyst, Poe Fratt, a best on the street all-star analyst as surveyed by the Wall Street Journal. He will interview Patrick Gruber, the CEO of Gevo. And before I turn it over to Poe, I encourage you to stick around for closing comments when Poe and I will discuss the key takeaways from this interview. Everyone, enjoy the program.
Good afternoon. This is Poe Fratt from Noble Capital Markets. With us today is Dr. Pat Gruber, who runs Gevo Inc. Gevo Inc. is developing technology that will help make fossil fuels less important in the transportation fuel market. And as a series of questions that we have prepared for today, we'll start off first by thanking you, Pat, for joining this conference call or video call. And from there, we'll jump in. Would you talk about how Gevo developed the technology and also how proprietary it is?
Yeah, glad to. Thanks for having me on today. I appreciate it. So years ago, we were looking at asking the question, what's it going to take to make a renewable resource-based fuel widely adopted? Now, I had just come off of doing the biodegradable plastics project that people call PLA, polylactic acid, NatureWorks PLA. One of the lessons we learned there in spades was that if there's any change in the delivery system or in the infrastructure near the consumer or to the consumer, that's a freaking problem. We just don't want that. So we asked ourselves, how do we design jet fuel, gasoline, diesel fuel that is the same technically, functionally, chemically, and make it from a renewable resource base instead? Well, we realized that gasoline's based on octane, 8 carbons long. We realized jet fuel has 12 carbons long. Diesel fuel has 16 carbons. So we said, where can we get a 4-carbon building block? Well, we, being Scotch drinkers, we were aware that there's this chemical called isobutanol, which has 4 carbons. It's a trace amount of, particularly in Islay Scotch whiskeys, it's a trace amount. It's one of the distinctive flavor odor characteristics. And we said, I wonder if we could make a yeast that instead of making ethanol, makes a whole lot of that isobutanol, and then we can just do chemistry to it and connect those 4 carbon units together to make real gasoline, real jet fuel, real diesel fuel. And that's what we set our hats to do about 10 years ago. And so we developed a yeast that does in fact no longer make ethanol, does make isobutanol. That required, I think we're up to like 260 some changes in the genetics of that yeast. So it's a real tricky thing to make sure that that yeast can be viable at full scale, which we've proven, and it can eat sugars, which we've done of all different types, and work at an industrial level. That's a lot of genetic engineering, and we had to keep it a yeast because if you get too carried away changing stuff, well, then it's no longer legit in terms of being commercially useful. And then in the chemistry of converting it into the isobutanol into the jet fuel, we've been running the plant since 2011, making jet fuel and diesel fuel in small scale, demo plant scale. Now it's 100,000 gallons a year. But it proves the point. It's just catalytic chemistry once we have the isobutanol. And it really is jet fuel, really is gasoline, and it really is diesel fuel.
Thank you. Carbon has been blamed for climate change, and reducing or eliminating carbon has been a major focal point for many industries. Can you talk about how Gevo helps eliminate carbon from transportation fuels?
Yeah, sure. So as you know, every time you burn a fossil carbon in a fuel, it makes a CO2 that wouldn't have been there but for burning that fuel. So the question is, how can you reduce it and eliminate it? Well, the answer is to use renewable carbon instead. What's the source of renewable carbon? CO2 in the atmosphere. How do you get the CO2 in the atmosphere? It goes into plants through photosynthesis. It makes sugars. We take the sugars, we ferment it to make our isobutanol. That's the 4-carbon alcohol. Then we do the chemistry to make it into the jet fuel, gasoline, and diesel fuel. And so what we're doing then is managing a business system that's capturing carbon from the atmosphere, taking the greenhouse gases out of the atmosphere, and then we're processing it and putting it into a product that can later be burned for a fuel. Now, the challenge in here is to be very careful about the carbon counting to make sure that you're paying attention to all the energy sources and all the rest, because it does take energy to power a plant in order to do these transformations. It takes electricity and natural gas for heat. Well, guess what we're doing? We got wind towers. That takes care of electricity. It's renewable. We're installing the base to put in renewable natural gas. That wipes out the carbon footprint from the natural gas. When you do those things and you count carbons, you actually can get to net zero emissions. Net zero. Burning a gallon of gasoline with net zero emissions of CO2. And you don't have the particulates, the nitrogen, or the sulfur that contributes to smog either.
So Gevo's product is completely renewable, Pat? Those are, green or renewable products are becoming more and more popular. And does the Gevo jet fuel and isooctane meet that renewable factor?
Yeah, 100%. Our stuff's 100% renewable. 100% renewable carbon. It can be traced right back to the carbon from the atmosphere.
That's great. And recently you've changed the business model a little bit or shifted it. One, you've essentially curtailed or shifted away from ethanol production as part of the strategy. And then secondly, you're shifting the business model to what I would call more asset light or developer role. Can you talk about how those shifts have happened and sort of the reasons behind those shifts?
Sure. So ethanol itself is a market that is pretty well built out. Some would argue it's oversupplied. Ethanol itself served a purpose, providing a very good oxygenate into gasoline. But for us, it's never been the long-run strategic objective. We do have an ethanol plant, and we'd run it if it makes money. We'd run it for certain. But that market is not attractive right now. In fact, most the margins would be negative. We'd lose money for every gallon we make. So we shut the plant down. The assets themselves are still useful and provide the base for which we can make our isobutanol and our jet fuel and gasoline as we expand those assets aimed at that. One of the things that's changed, and there's actually probably two things that have changed. One of them is that when you look out going forward, carbon value, the reduction of carbon is valuable. And people believe it now, where 5 years ago, maybe it would be valuable. Now they believe it because of the policies in California, because of the policies in Europe, where companies are being forced to count carbon and reduce them and prove that they reduce them. Well, guys like us come along with the technology and we can prove that it reduces carbon along the way. That makes it more certain in the marketplace. Now, the other side of that is then we now have enough customers in the queue where we can build out enough meaningful capacity whereby we can go to this developer licensor model. So we're going to have to be market developers, project developers, licensors. The gallons we have under contract currently are 17 million gallons. That represents across the life of those contracts over $600 million of revenue. And we have in our queue of customers, which I expect to get done fairly shortly, another $1.5 billion of contracts, take or pay basis. That would generate $1.5 billion of revenue across those contracts. And so that now is interesting. It catches people's attention and goes, well, I'll be danged, it's real. And that's what allows us to change models.
And can you, it sounds like you're going beyond the airline industry and now marketing more to the broader energy industry. Is that correct?
Yeah, so for us, one of the things that we had recognized long ago was that you want a technology that operates as a platform, that you can move it around, move product mixtures around and things like that. So for example, our technology built into it is the ability to go from 50-50 jet to gasoline to 100% gasoline to 80% jet and anywhere in between. It's a separate add-on technology to go to diesel fuel. We did that on purpose. Now, our sales have always been a mixture of jet and gasoline. And in fact, it's going to be the gasoline that's the more important product and more valuable product over the long run. And it always has been that way, which is interesting. And so people latch on to jet fuel because, oh, jet fuel's cool. We can see the planes that make smoke. We can do something about that. Yeah, we can do something about that. But you know what? It's that giant chunk of gasoline that's valuable. And think of that, the product that we make, think of it as renewable premium gasoline, you know, like the 100 octane type. You know, so it's really high-end gasoline, and there's a demand for that. And oil companies can't just change their refineries to make more. They got to go build like $1 billion alkylate plant. Well, guess what? Here's another way to do it, and it's a whole lot cheaper.
That's great. And can you talk about the business model a little bit? And it seems like that you're expanding your revenue potential just beyond just selling the product and either aviation or the transportation market. Can you talk about the varied sources of potential revenue that you're looking at?
Sure. So in a project developer model, we would be the people who'd go ahead and do the project. And so with that, we get paid for that development because it takes, you got to do the legwork, groundwork, organize it, get it all figured out, do the engineering, etc. That gets paid back out of the project funds. So that's a source of revenue. Second one is ongoing licensing fee or a licensing fee. Third one is we're the experts in operating these plants, particularly the biotech side of it. You know, there aren't that many people who've ever done these sorts of things before, but I happen to have a bunch of people who have, and we got to train others to do it. So we'll get an operating contract out of that. So we have a line item that would be a management contract. We also are the market developers, and so it's a case of how we strike deals and do the market face. And so the game for us then is to arrange the marketplace, the pricing, et cetera, make sure the projects are attractive. We build in our fees to those projects. Even after we extract our fees, the projects show returns of 20 to 25% internal rate of return on a levered basis using reasonable assumptions. That's pretty attractive and allows for us to have a pretty nice cash flow stream coming to the company without having to do the heavy lifting and the bulk of the project level investments. And we still wind up with a retained interest as well.
Great. And when you look forward, you know, we're going through a very unusual environment that's caused by COVID-19. Has that changed anything for Gevo?
Not in a material way, because everyone that we meet, and our customers are out in the energy space. So these are people who are trading and buying and producing fuels, or, you know, everybody thinks that we're going to be back to somewhat normal within, 18 months. Well, it takes 2 years to build one of our plants. We got to finance it first. So call it 2.5 to 3 years from now, we'll have production on scale. That means we're back in normal world. And so nobody is too worried about it on that stage. I think that you see us, we will start to emphasize, and you noted it already, that we've shifted on our website, for example, pictures of cars rather than jets, because people instantly latch on to, well, God, they do jet only, they're out of business. Well, that's never been the case. It is the thing that people are most interested in and talk about because it's cool and sexy. But in fact, it's gasoline is the big deal and has been all along. So we'll be working on redirecting conversation, but fundamentally it doesn't change anything.
Great. You've developed a green product. You've proven that it's scalable. What's the biggest challenge going forward, Pat, to get this product to commercialization and to actual adoption?
Yeah, there it is. It's about money, raising money, and we have a project that we're working with Citigroup to raise project funds. Now, the way that this works is these would be off Gevo balance sheet. It's in a subco, and it'd be project level financing. It's a common way of doing stuff. There'd be debt and equity players who want to participate. People have said that they're looking for the next great thing of renewable resource-based products and something that can make a difference. Well, we can prove to them that we can. And so Citibank is working with us to try to raise the money so we can go out and build plants. And we see that there's an opportunity for 3 plants right now. That's what we see. 1 expanding Laverne, and then 2 other sites, each of which would have about 30 million gallons. And that's the main thing that we have to do. And you're right, products are proven. We know they work. We've been selling them. Technologies work. We scaled them. We've de-risked it every way we can think of. We got to just go make it a whole lot bigger.
Great. Is regulation an issue at all, or how does how is Gevo touched by regulation?
Whenever you are valuing carbon, it's touched by regulation in one way or another. So for us, there's think of it this way. The underlying commodity is jet fuel. That's what we're selling. Ours happens to have renewable carbon, right? Or our gasoline. It's gasoline, man. So you could trade it at the same way as you would like a premium alkylate. So that's the underlying commodity value, except for renewable carbon, and we've counted them carefully. And so you can get rewarded for that. And in California is a great example where you count carbon in they could do carbon index. We can get to a very low carbon score, and that's worth money, like 1.5 cents to 2 cents a gallon. I mean, a CI point, a carbon score point, and you're reducing it, 60 to 100 points, that adds up. So 1.5 cents to 2 cents per carbon index unit reduction translates to a lot of money on a per gallon basis.
Great.
In Europe, it's a requirement. Companies have to lower their carbon footprint to comply. You've seen this in some of the companies I'm sure you've written about. They got to comply. And so how they do it? Well, they got to have in their portfolio products like ours.
Yep, and even with lower demand potentially in the aviation market, they still have pretty ambitious goals to reduce carbon emissions by, over the next couple decades too. Those have not been, there's probably going to be no relief from those.
None. In fact, it looks like it's intensifying in Europe. So we'll see what happens with them. There's lots of talk as they're coming out of, the post-COVID. People have learned how to breathe clean air. And they're asking, how do I get to have clean air? Well, you got to stop burning gasoline for one. The jet fuel is another contributor. Got to stop that. So it's going to be interesting to see what all shakes out of this. And one of the things that's been very interesting, I don't know if you've ever looked at projections going forward 30, 50 years out in terms of what the mix of fuels would be. You got to look at that because pretty much everywhere in the world you'll find that even with the advent of electric vehicles, we'd be burning 30, 50 years from now the same amount of fossil-based carbon as we do today. That's scary. That's even to me scary. And I'm kind of a conservative, on the greenhouse gas stuff. I'm not a global doom and gloom kind of guy because I know things have to transition. We can't just shut off the economy, and fossil fuels are part of that. You got to transition away from it. Well, that's what we represent is a way to do that over a period of time. Well, right now, there is no way to transition it. Well, that's what the beauty of what we bring is. Now we can show people, look, a whole gallon of fuel with net zero emissions. Net zero. That's a new concept for people. That's not been in consideration. That's not even what they've ever heard of before. And yet it's still jet fuel. It's still gasoline. That's what makes it different.
Great. We'll wrap it up there, and I want to thank Pat for a very informative interview. We appreciate your time and look forward to doing follow-up interviews in the future.
My
Thank
pleasure.
you.
Thank you for having me. I'm glad to do it.
So, Poe, this was really an interesting interview. I think when I first read about the company, I had thought that they were actually reducing carbon footprint primarily because of the fact that their product itself was better for the environment and so forth, which it is. But I thought that in itself was the product that was reducing the carbon footprint. But it's actually the way they produce it that it actually helps the environment, that they create this product at a zero carbon footprint. So that's the way to look at that, right?
Yeah, when you look at, especially from the standpoint of creating the renewable aspect, also that's lower carbon, they've looked at the entire process from the time when the corn is actually planted to what inputs go into the farming of that corn, looking at low nitrogen fertilizer or environmentally friendly fertilizers and other inputs as far as production. And then looking at the plant and the power sources, trying to get those power sources to be even greener, if not, no carbon, but more green too. And it all feeds into the ability to essentially create a fuel that has a carbon score that has a much lower carbon input or component than what we're currently consuming, that are generated from fossil fuel. Part of reducing that carbon is substituting the corn from, actually producing aviation fuel or jet fuel and gasoline from corn as opposed to from oil. But then the other parts of the component also help improve and make the product more valuable.
And Poe, from the perspective of the competitiveness of the pricing of this product, I know he was talking about getting carbon credits. How competitive is the pricing for a gallon of gasoline versus the type of gasoline they produce? Is it competitive?
It's competitive. It right now is more expensive, just like many other renewable or greener products. It's more expensive, but there is a willingness of companies to pay for that, and also I think down the road you're going to see a willingness of consumers to pay for something that's greener, that reduces carbon emissions. Over time, it should be very competitive, where potentially you could compete on a standalone basis without the carbon credits. But they're clearly, that's something more down the road.
And he was talking about a threshold of getting project financing. What do you consider to be the threshold to where we really start to see this company gain some traction?
I think there are a couple different potential catalysts. One are additional contracts beyond the aviation market. Right now, they've signed 17 million gallons per year of contracts to supply the jet fuel into the aviation market. And I think as they broaden their contract portfolio into the actual transportation market and sign agreements with either energy trading companies or refiners, that potentially could be a catalyst for the company. And then, as you mentioned, project financing. I think that could be, as they better define exactly how much money they're going to be raising, and better define the scope of the overall modifications they're going to make at their Laverne, Minnesota plant, and then also potentially even identifying 2 additional sites. As more and more details become apparent, then that could be a catalyst for the stock. Thirdly, they do have some refinancing activity that they need to do by the end of the year, and that potentially could be a catalyst for the company too.
Great. Well, thank you, Poe, for bringing Gevo to the program today and to our listeners and viewers. For more information on Poe's research and or more information on Gevo, we encourage you to take a look at channelchek.com. Channel is spelled the traditional way and check is spelled C-H-E-K. So it's channel, C-H-E-K.com. Thank you again. Thanks, Poe.
Thanks, Mike.